Good afternoon. How are we doing today, guys? All right. Thank you, Craig. All good to go. I appreciate that. Hey, Mike. Did you get my email back, Mike? Good, good. Hey, Frank. Okay, perfect. All right. Well, thank you, everybody, for joining us today. I'm going to go ahead and get our recording going so we can hop right in. So welcome, everybody, to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and this webinar today is brought to you by and hosted by Nadex. So we appreciate them having us on, and we appreciate you guys joining us today. And, you know, kind of the point of these webinars that Nadex provides is Nadex provides a ton of free information, free tools, free education to their members. And, you know, we're just here to kind of help you get an idea of who and what is Nadex, what are the products that Nadex offers, how can you utilize them in your trading, you know, helping you understand the products and different ways to trade them, strategies, systems, understanding the tools, understanding the Nadex platform. And we're just here to give you some good free education. And, you know, as you know, we sometimes cycle back through. We'll kind of start off with some basics, you know, for people that are brand new, and then we'll kind of build on that foundation. Then we'll build up to different strategies and systems and get a little more advanced. And today is just kind of going to be a little bit of an intermediate type of webinar for those of you that have been around and been trading Nadex for a while. This may be very elementary to you. You may fully understand what the strike ladder is. You may fully understand how to utilize it in different ways. You know, for some of you, it might be very elementary. For those of you that are joining us that are new, it might be something you don't even know what it is or how to use it. And so we've all been at different, you know, stages and places in our trading path. And, you know, even for those of us that have been around for a long time, we at one point where you are at now. And so we always cycle back through and make sure everybody has the foundations as well. So let's get our disclosures knocked out here. Trading futures, options, or any financial instrument involves risk. It may not be suitable for every investor. And, you know, trading involves risk. Any decisions you make are your sole responsibility. And as always, past performance not indicative of future results. Also keep in mind, guys, you know, anytime on a webinar here that I'm in the Nadex demo account and I'm showing you a trade or entering a trade, that is not a recommendation. That is not trading advice. That's simply me just trying to help you understand and explain what I'm teaching you today, showing you how to actually just use the Nadex platform and use an order ticket to enter and exit orders. It's strictly for education. It's in no way trading advice. All right. And, you know, Apex and Nadex, two complete different separate companies. Nadex is an exchange. Apex, we're an online company of traders helping traders. We're, you know, an education-based community. We've got over 20,000 members. We've got, you know, strategies and systems and indicators and live trade rooms. A lot of our systems focus on risk management and probability. That's why we love the capture risk products of Nadex. But we're traders just like you. We trade every day. Like I said, we have the live trade rooms. We're a Nadex education partner, and we do these ongoing application and strategy webinars for you. Just real quick about me, I've been head of operations with Apex now for going on about 4 years now. Got a background in banking and as a stockbroker. I'm an educator and, again, a trader just like you. Okay, and that's what we're here for. It's just to get you some free tools and some free education. But like I mentioned, let me go ahead and pull up. If you go over to nadex.com, you know, if you're new to Nadex, it's a great place to start off and, you know, getting some good information just right here on the homepage. Basically, Nadex offers two different products. They offer binary options and spreads. And you can go to either one of these tabs here and, you know, go through and watch some videos, see some, you know, Q&As, get some understanding of the basics of what binaries and spreads are all about. But right over here, if you go to Learning Center, okay, you've got all kind of great stuff here. You know, you've got ebooks and videos, trade examples, FAQs. But if you go right here to webinars, this will give you a list of all the upcoming webinars so that you can get registered and signed up for those, as well as get email reminders when those are coming up. But right here under Webinar Archive, if you're new and you haven't been with us on, you know, some previous webinars, if you go to the webinar archive and then right here, filter by presenter, go down and find us right here, Apex Investing Institute. And yes, this webinar we're on today is being recorded. All webinars are recorded. And then this is where the recordings are placed. Okay, so if you want to go back and watch this webinar, you can. You can also go back and catch up on any previous webinars. And this is just a wealth, a library wealth of information, education here. You know, everything from some of the brand new basics of whatever, you know, basics of spreads, basics of binaries, understanding premium collection, how to trade morning breakouts, top mistakes, which ones, you know, should I trade? Just a wealth of knowledge and information in here for you to go back through and catch up on, okay? So definitely make sure you utilize that. One other thing, very important, especially for today's webinar, but under trading platforms, you can go directly to the online Nadex platform. They've got, you know, a great mobile app for your Android phone. But right here, demo trading platform. Nadex will give you a free $25,000 demo account. All right. All you got to do is just fill out, you know, your name, your email, and a quick username, and hit Open My Practice account. All right. In a few moments, you'll get an email from Nadex with a temporary password. You can use that and log right into the Nadex demo platform. All right. And once you do that, you can go right here to My Account, and you can go to Settings, and then Password. You can change that temporary password to, you know, a password of your choice, something easy for you to remember. But they give you a $25,000 free demo account. All right, it's a great place to learn and practice and get some good education. Learn, you know, practice different strategies and systems with demo money as opposed to your live money. But also just to get familiar with the Nadex platform and how it works. You know, what are the different binary options they offer and spread options they offer, how to enter and exit orders, how to open, you know, different Nadex charts and you know, on the platform here. Great place to practice. If you don't have one of these, get one of these right now, literally while we're on this webinar. Go sign up for a demo account and get that email and log in. That way you can easily, you know, better follow along with us as well today, because I'm going to be utilizing the platform quite a bit. To show you a little bit about what we call the strike ladder. Okay, so if you don't have one of those, hop on over and get one right now. So today's topic, we're going to talk about using the Nadex strike ladder for trade management. We'll talk a little bit about how to set take profit orders with Nadex. And what I'm really trying to get you to understand is to think outside the box a little bit with Nadex binaries. You know, a lot of people think of binaries as, you know, holding them till expiration, and they're either worth all or nothing, 0 or 100, and that's it. Well, there's plenty of trade systems and strategies, you know, that, you know, might involve you holding binaries till expiration. Most of the ones, you know, we do over at Apex, you know, we don't always hold until expiration, but I want to get you thinking a little bit beyond just that basic of 0 or 100 at expiration. I want you to think a little bit about some shorter term trades, some shorter term moves of the market, and talk to you also about binaries as a directional trading instrument. All right, just like you would trade any other instrument, following the market, following the direction and trend of the market, how to do that with binaries, even if you're not going to hold until expiration. Okay. So we're not going to be covering the basics today of what is a binary, how does it work. You know, we understand that a binary is simply a statement and it's 0 or 100 at expiration. But I did just show you where you can go back into the webinar archives to watch full, complete, you know, basic 101 videos on binaries and spreads. So we're not going to do an in-depth review today of the basics of binaries. So let's start off with what is the Nadex strike ladder, okay? So let's pull back up the Nadex demo platform. For example, let's go to some stock index binaries. Let's go to US Tech 100, which is a derivative of the NASDAQ. Right here, we've got some binary contracts that opened at 12 p.m. and they expire at 2 p.m. Okay, so again, we're not going to get in depth on the basics, but what is a binary contract? Well, each one of these lines right here. You see it? US Tech 100 will be greater than 6382 at 2 p.m. Okay, what does the one below it say? Greater than 6378, 6374. Each different one of these is a separate binary option contract. All right, we can go and open any one of these that we choose, and the order ticket will pop up, and simply all it is a statement. Okay, a binary is exactly that, binary. Yes, no, 0 or 1, true or false. Right? This statement will happen or will not happen. It's literally just a statement. The US Tech 100 will be greater than 6362 at 2 p.m. today. It either will be greater than that or it will not, right? It's yes or no. It's literally that simple. Okay? And if I select this binary contract and I believe that that statement is true, then I'd want to buy a contract if I think a statement's true. I'd want to sell a contract if I think it would be false. Very simple. Okay, but I don't have just one option of binary contracts. If I want to trade the Nasdaq derivative and I want to trade binaries, I don't have just one option of will it be greater than this or less than this. I've got a lot of different options here. And in this particular example, these are called strike prices. Each one of these binary contracts, this number that listed right here is called the strike price. 6382 is the strike price for this contract. 6378 is the strike price of this contract. 74, 76. You see that these are 4 points wide, right? Each one of these strikes is 4 points away from the other one. Okay? So, okay, well, I've got a ton of different options there. All right, by the way, that's called the strike ladder. That's all the different strikes in an order, right? Kind of ascending up or descending down like a ladder, okay? It steps up and steps down, all right? And you can choose whichever one you want based on what is available to buy or sell that particular contract. Right here, the offer side, that's what you can buy for. The sell side, that's what you can sell for, okay? That particular contract. If you open up that contract, you'll see that pricing within here as well. You can buy for this, sell for this. Okay, so that is the binary strike ladder. For those of you that are brand new, had no idea what that term meant, that's what the strike ladder is. You can go to any other product, if you want to trade the Wall Street 30, or if you want to go into commodities, trade oil, gold, you pull up those different expirations, that there's going to be a strike ladder there. Okay, so you've got a bunch of different options there. Now, how can you utilize that though to help you select some binary options? Okay, of which one do you want to select? Well, that's a whole other subject on its own, because that first of all depends on, people ask me all the time, well, which binary do I get? Well, that depends on what is your strategy or system. What system are you using? Are you using a trending system, a range-bound system, a volatile system? How much time do you have to expire? Depends on what you're trading, all right? You can't just go in here and start clicking binaries and buying and selling binaries. You have to have a system, all right? You have to put time in, invest time educating yourself, learning a strategy, learning a system, having your charts, having your indicators, understanding the ABCs and 1, 2, 3s of that system. And you choose a binary contract based around your system, okay? You don't make some other system work around whatever binary contract you want to choose, all right? Binaries are a tool. Okay, well, why is there so many different ones? Well, that way, based on whatever system you have or strategy you have, hopefully there's a strike there that would fit into that system, okay? Whether you want an in the money binary or out of the money or at the money binary. So let's talk about that real quick. What does all that mean? Okay, notice over here under the indicative price, okay? The indicative price is the market price. That's where the Nadex indicative is right now. Notice right now it's at 63.71. You see that? So if I look at all these different strikes, which one is closest to 63.71? That's going to be this one right here, right? Okay. Now notice how, and even if let's go out to the 3 p.m.s. Okay. And let's see here, 63. All right, which ones in here are closest to 63.71? Well, so we got 69 and we got 73. So 71 would be you know, the market's kind of right in between these two here, right? Notice where this pricing is, okay? You see it's approximately, you know, if you average all these out, it's approximately around 50 bucks. Let's go back to 2 p.m. This one right here, 63.70. See how it's around 50 bucks, okay? See, the market is now at 63.69.5. It's real close to this 63.70 strike. Or it's close to 50 bucks price-wise. So again, at expiration, a binary contract is worth what? Either 0 or 100. Okay? And what is a binary contract? Well, that the market will be greater than 63.70. Okay, right now it's at 63.68 or 69. It's right close. So the strike price and the market price are very close to each other. So at expiration, one tick above could mean it expires in the money true. One tick below expires out of the money false, right? So it's right on the fence there. It's kind of right in the middle. It's kind of 50-50, okay, when they're right close together. See, and as it starts to go down, see, now the market is dropping down. Notice the price is going down. It's not right at 50 anymore. Okay, where's the market now? 63.65. Where's this strike price? 63.66, right? So it's very close. Notice the pricing, right around 50. Remember when this pricing was a little higher? When the market was higher, this pricing was higher. Okay, so when the strike price and the market price are right close to the same, that's called an at-the-money binary, because the market and the strike price are right there at the same price. It's still on the fence. It can move a little and go up to 100. It can move a little and go down to 0. So at the moment in time, it's right around 50 bucks. Okay, that makes sense? As you see, any below that are going, you know, down the ladder here towards 0. Any above that are going up the ladder towards 100. Okay, so it's a strike ladder. All right, you kind of see how that works? Makes sense? Okay, so that's the strike ladder. And when you look at a strike ladder, don't just look at these as, oh my goodness, there's so many different options and all these different strike and all these different prices. I don't know what's going on here. Okay, well, train your eye to when you open a strike ladder and you're looking at all these different options, train your eye to go and find the approximate $50 range, right? So without even looking at the indicative, you can just open this right here and you can look and say, okay, these right here are priced around the, here we go. The market's somewhere right in here. And is it 63.61, 63.61? See that? I don't even have to look at the indicative to know about where it is. So I draw my eye to where is the pricing right around 50. And in my head, I kind of draw a line right here. Does that make sense? So it's kind of like if I had a chart, okay, and I was looking at a chart of the NASDAQ, okay? And let me just add one more quick thing on here real quick. Sorry about that. Toolbar shortcut, there we go. So it's kind of like if I'm looking at a chart and okay, the price is right here. It's kind of like I'm just drawing a line in my head going, okay, that's where the market is right now. So I know if the market's right about there right now, if I buy a binary right about that same place, it's going to be about 50 bucks. Well, now I got to move it up here, right? If I buy a binary up here, it's going to be cheaper, 40, 30, 20, 10, 0, right? If I buy a binary down here below the market, instead of 50, it might cost me 60, 70, 80, 90. That makes sense to everybody? And why are those binaries down here priced closer to 100? Well, because the statement's already true. Remember right here, around 50? The reason they're at 50 is because the market and the strike are right close to each other. But look down here, why is this one priced so much higher? What does the statement say? That the market will be greater than 63.49. Well, it's already 63.63. It's already a lot greater than that. So the probability of this expiring being worth 100 is a lot higher, so it's priced closer to 100. Okay? Make sense? All right. Let's take a look here and let's pull up any other market. Let's pull up some, let's see here, oil. How much we got left on oil here? You know what? Hold on. Let me pull up. Let's pull up some euro dollar, 3 p.m. Okay. See the same here? You've got quite a few different strikes. Any market you go to, you've got a bunch of different strikes. And what do I tell you to do? When you pull up this big strike ladder, don't get all confused. Where do you want to kind of draw your eyes to? Where is that? Around 50. Here we go. Right in here. So I'm going to draw a line, right? What is the market? 1.1904, 1.1906. See? The market and the strike price are real close together. And then in your head, they go down, right? 38, 29, 21, 15, 10. And here they go up, 60, 70, 80, 90. Just like drawing a line on a chart. Okay? So, okay, great, John. That's cool. Thanks for explaining that. But how do I really utilize that? You know, what can I do with that? Well, again, it all depends as far as which binary contract you choose. It's always going to depend on your strategy or system. But remember when I told you in the beginning, I want you to learn to think a little bit beyond just 0 or 100 at expiration. Okay? How can you utilize binary options as a directional instrument? And what do I mean by that? Well, let's pull this chart back up. Okay? So let's just say I had this chart up. And let me squeeze this chart down a little bit here. Okay. And just for example's sake, okay? Just for example's sake. This is in no way trade advice. This is no way, you know, me telling you what the market's going to do. I don't have my indicators on here. I'm strictly showing you an example. But let's just say that we happened to have a some type of reason for a trade entry right here, okay? And whatever strategy or system we had was telling us that the market is going up, all right? So we were looking for the market to go up. We were looking to place an order to buy. And let's just say whatever strategy or system that we have, you know, we're utilizing strong levels of resistance or support. We're using fib levels, deviation levels, whatever it may be. But let's say that we had an entry to go long, okay? And the market's right here around 1 deviation, okay? And, you know, again, this is strictly example because I normally would not be trading long at a 1+1 deviation. All right, so this is just for example's sake of level examples. So for whatever reason, I had an entry here and I'm expecting, you know, there's no other areas of resistance, important levels till up here at this 1.5 deviation level. Okay, so let's say that I thought the market would move up to this 1.5 deviation level. Okay, so, but what does that mean for my binary? How much am I going to potentially profit on a binary? Well, first of all, it's going to depend on which binary I choose, right? Okay. Also, how long is it going to take the market to move that far? Depending on which binary option I choose, will the market move that far before or after expiration, right? Well, let's take a look here. Let's just say that, let's do this a little bit differently. Let's say that we only expected the market to go up to right here, to 63.80, okay? Let's say we didn't expect it to go up, but let's say we had another level of resistance right here at 63.80, okay? Well, where's the market now? 63.64. So if we have to go from 64 to 80, how many points is that? 16, right? From 64 up to 80, be about 16 points, correct? Everybody agree? Class paying attention? Do I have my math right? So we're expecting the market to move 16 points. Okay, so what kind of value can I expect out of my binary with a 16-point move? How do I possibly even know that? Well, it's right in front of you. That's what the strike ladder is for. How far apart are these strikes? 77, 73, 69. Who can tell me? Let's make sure everybody's awake here. Right, 4 points. 4 points different than the strikes, right? Okay, so we've got 4 points between each strike. So let's take a look at something. So what does that mean? That means if I'm expecting a 16-point move in the market, all right, if I'm looking up to that next level of resistance or support or fibs or deviations, I'm expecting a 16-point move. What does that tell me on this particular market? Other markets may have different widths between the strikes, right? But on here, I've got 4 points between each strike. So if I'm expecting a 16-point move in the market, I can expect a move of what? 4 strikes. Make sense? Pretty basic. So for example, if I bought this binary right here for $12.50, okay? And, or actually, let's do this differently. Right here, 63.69. The market's at around 63.68.4. It's right close to that, okay? And this binary is priced approximately at what? 50 bucks, right? If the market went up 4 points, where would the market be? The market would be around this strike, 63.73, right? And then all of a sudden, this 63.73 would be priced closer to 50, correct? Then if the market went up another 4 points, it would be up here at about around 63.77. And then therefore, this binary would then be priced around 50 bucks, correct? Because remember, wherever the strike and the market are around the same, it's about 50 bucks. Make sense? So if the market went up a couple strikes, all of a sudden this one up here would be worth 50. But this original one we looked at, it would be worth more than 50 now, right? Because it's now 8 points in the money. 2 strikes in the money, right? Did everybody follow me there? So let's look right now. This one that's priced around 50, if we went down 2 strikes, 1, 2, where is this one priced at? This one down here, around 78 and 88, right? Makes sense? So if we're looking at this one and the market went up 2 strikes, this strike up here would then be priced around 50. Where would this one then be priced at? about what this one is down here now. Yeah, Nick, exactly. Does that make sense, guys? When you've got 4 points between the strikes, like in this example, and if the market goes up 4 points, what do you think that one's going to be priced at? And then another 4 points, what is going to be priced? They just kind of move up or down the ladder. Make sense? Now, the closer you get to expiration, when you're getting right close to the expiration, okay, those numbers can get skewed a little bit because they have to move faster towards 0 or faster towards 100 when you're real close to expiration. But when you've got some time out, that's how you can utilize the strike ladder to determine, hey, what value can I get out of my binary? So let's go back to our example. We're expecting the market to go up. Okay, we're expecting it to go up to a strong level. We're expecting it to go up 16 points, right? So we're expecting it to go up 4 strikes. So which binary would get us the most value out of a 16-point move or a 4-strike move? We don't necessarily want to hold it to expiration because we don't know how long it's going to take to get there, or we don't know if, hey, it might get there, okay, it might get up to where we want it to be, but then it just sits there and it comes back down at expiration and we expire worth 0. We don't want to do that, right? We don't want to be right. We don't want to choose the right binary. We don't want to, determine the correct amount of movement and then hang on to it and it's gone and worth 0. So let's look at a couple examples. If I bought this one right here for 11 bucks and then the market moved 4 strikes worth, right? So 1, 2, 3, 4, right? What could I, if I bought it, what could I sell it for then? Okay, Nick, well, not necessarily, Nick, because you can look right here. If I bought it here for $10 and it moved up 16 points, that means it's going to be 4 strikes down, right? 1, 2, 3, 4. This one. See that? So what could I sell it for? 29. Because if I bought it, right? If I bought it and then I want to get out of it after it makes its move, I have to sell it. Right? So I can buy it for 11. If it moves those 16 points, I'll sell it for around, at this point, 40 bucks. So I make about $30 in profit. Does that make sense? Did I lose anybody right there? Yeah, Mike, exactly, about 29 bucks. Nick, everybody got it? Okay, so that strike with a 16-point or a 4-strike move, I would make, about 30 bucks. Okay. What about this one? I buy for 20, then it goes 1, 2, 3, 4. I can sell it for what? 75. Oh, hey. Now that's a little more, right? So now I'm making about $50 on that move. I'm risking 20 instead of 10, but I can make 50 instead of 30. That makes sense? Everybody see that? Okay. What if I got this strike here around 60? 1, 2, 3, 4. I could sell it for 85. That's only a $25 move. Okay. What if I bought this one for 86? And it goes 1, 2, 3, 4. whoa, I can buy it for 86. It moves 16 points. I can only sell it for around 86 or 88. Okay. So a couple things here. You have to realize that the closer you get up here to 100, it's going to move slower in value. You see that? Does that make sense? Let's look at something. Let's refresh this. See here, look. Where does, and let's pull up even another one to kind of show you how this is consistent, because this is just how binaries work. Look down here. Okay. 1, 2, 2, 4. There's not a lot of movement down here closer to 0. It doesn't move fast, does it? Look up here. 85, 90, 93, 94. It doesn't move fast right here. Where does it move the fastest? In the middle. Does that make sense? In the middle. Do you see that? Where the price gaps get bigger towards the middle. Okay? That's going to be where your quickest value is at. That's where you're going to get the most movement between strikes. All right. So Nick says, is there a formula for, how things are set, or is it just what the market's doing that day? Well, it's kind of two answers to that, Nick. First of all, it's pretty much always going to be consistent that the closer you get up here to 100, or the closer you get down here to 0, you're not going to have a lot of movement between them, because that's just how options work. Okay. Your quicker movement's always going to be in the middle. Okay. Now, some days you'll see bigger gaps between these. And some days you'll see smaller gaps between these, even in the middle, based on the IV of the market, the volatility of the market. If the market's moving crazy, hundreds of points all over the place, you're going to see much smaller gaps between here, right? Okay, if the market's not moving as huge, you're going to see bigger gaps in here, bigger increases of value between the strikes. Okay, so yes, that's going to be based on what the market's doing that day and the IV of options. That's just how options work in general. Okay, so why do binaries move quicker towards the middle? Well, let's take a look. Let's see here. What am I looking for? Let's take a look. Where is the market right now on this chart? Okay, there's where the market is. If I bought a binary way down here for like $85, well, there's a pretty good probability that that's going to expire in the money, because the market's way above it, right? So I bought it for 85. At expiration, it'll be worth 100. But it's not going to move from 85 to 100 real quick, except for right at expiration. That makes sense? Okay. If I bought a binary way up here for $5, okay, well, unless the market just zips way up there, that value is not going to jump up real quick or jump down real quick until I get right closer to expiration, correct? Because these are kind of extremes, right? If I buy a binary right here where the market already is, what's it priced at right now, approximately? What would a binary right here be priced at? $50, okay? If I bought this binary right here at $50 and the market just went up to right here and expired, how much would it be worth? Bought it right here for 50, market expires right up here, be worth 100. So just in a one tick or a few, 1 point or a few ticks move up can be the difference of value of how much? $50 at expiration, right? Does that make sense? Like when you're right here in the middle, like this way down here isn't going to move in value quick. This way up here is not going to move quick. But right here in the middle, you've got a 50 number, and then just right underneath it could end up being 0. You've got a 50 number just right above it could be 100. Like everybody follow that? Why this is a volatile area and it moves quicker? What if I buy one right here for 30, right? And then if it gets up here, it'd be worth 50. And then the market expires right here, and it's worth 100. Well, just a very little movement took this from 30 to 100. Because when I'm at $30, all I have to do is get over the $50 level to be over the strike, and then just time itself getting close to expiration will cause that value to go from 30 to 50 up towards 100. Because all I got to do is get over that strike price for it to start heading towards a value of 100. Does that make sense? That might have been overload for some of you. Does that make sense? That's why this middle ground area moves faster. Okay? So when you're trading a strategy or system, and for example, like I said a minute ago, for whatever reason we had, an indication to buy for the market to go up, okay? And we expected it to go up to, whatever next level of support, resist, we had a target area it was going to, and we can see, okay, how many points of movement is that? All right, so I'm expecting 16 points of movement. Great. Which binary contract should I get? Well, first of all, you want to make sure that you give yourself enough time to be right. Okay? Like right now, if we were trading that, would I want to choose these binaries here that expire in 17 minutes? Or would I want to look more at a binary that expired in an hour and 17 minutes? Or 2 hours and 30 minutes. I'd want to make sure to give myself enough time to be right. Okay? But I don't want to go so far out where there's not good strikes available or there's not a lot of movement between the strikes. Okay? So if I found something like this, I'm saying, okay, I think that, for example, I think the market will make that move within an hour and 17 minutes. Where in here do I get the most risk for reward out of a 4-point move, right? And it's not right in here, is it? And it's not down in here. It's right in here. So I can look at that real quick and say, okay, 18, 1, 2, 3, 4 to 74. I like that. 28 to 74. Well, 58 to 80. Nope. Okay, I think I want to go with this one. Right? And you can look and see where that move is going to be. Okay? And, where you're going to get the most bang for your buck. And you can get an estimation of, all right, if I, get in here and the market goes up 4 points, it'll be worth that. Another 4 would be worth that. Another 4 worth that. Another 4 worth that. Now, again, when you get closer to expiration, it'll move quicker. But does that make sense of how to kind of utilize this strike ladder where it's not just a menu? Okay? It's not just a menu of, oh, here's all your options and just randomly pick one. When you open this strike ladder, immediately train your eye to go to the $50 level and draw a line, okay, in your head of, okay, there's where the market is. We're going up to 100. We're going down to 0. Great. What do I expect the market to move? How much? Okay. What are the different widths of strikes? So where do I get the most bang for my buck, risk to reward between those strikes? Because what a lot of you do when you're new is you go, well, man, I like this. I mean, look, if I can buy this binary right here, I mean, geez, I buy one, I'm only risking $5 and I can make $94. Ooh, I like that. And then you wonder why you're not making money all day long, right? For one, that's a very low probability. For two, even out of a 16-point move in the market, you're going to buy it for $4. 1, 2, 3, 4. You're not making any money on that, right? Ernest says, oh, light bulb, as opposed to right in here buying at 20, going 1, 2, 3, 4. You can get out for 70. Why? Because it's getting you over the strike, over the 50 level, closer to 100. Make sense? Okay. So it's not just a menu, guys. It's a way to see your options and then see where is the best bang for my buck. Where do I get the most moves, the best risk to reward? Okay, then I can make my selection. Okay. Then I can make my selection of what I want to do. Okay. So, and guys, another thing, just real quick here, any one of these, all right, any one of these different contracts, see right here, see where it says charts, or see these arrows? If I click this, see right here it says binary ladder chart. Well, what does that mean? Okay, go into your demo account and play with these a little bit. Okay, this is a chart of the Wall Street 30, and what do you see right here? Strike prices. Strike price. You can put your mouse in there and you can, scroll up to, zoom in, zoom out. You can actually see those different strike prices. You can change 10 minutes, 5 minutes. You can add some indicators on. You can do drawings. There's different layouts. And you can actually see some of these strike prices right on your chart, okay? You can pull the charts in, pull the charts out. Go in and play with that. On the Nadex platform, there's some videos in there as well, but you can also see these strikes, right on the chart to make it a little more visual for you as well. Okay, so just a couple of more great tools there that Nadex offers for you. Okay, let's see here. Nick, is there a good webinar explain how to develop a trading strategy? Nick, there's a lot of different webinars that you can go and check out, in those webinar archives as far as some different strategies. Also, feel free to hop on over to apexinvesting.com and check us out. You can, we have a bunch of free education over there and strategies and systems you can come check out as well. And feel free to ask any questions at all on some of those different strategies too. Okay. Let's see here. Ron, I wouldn't really, I don't really use them for spread trades at all. Okay. Since spreads are completely different as far as, they don't have strike prices, as it were, the same as binaries do. Okay. So don't really particularly use that, use the binary strike ladders for spread trades necessarily. Okay. All right, guys, I hope that helped. I don't want to keep you too much longer. I want to kind of give you a little bits here at a time, but I hope that helped you see how you can utilize the binary strike ladder for more than just using it as a menu. Okay, you can use it to manage your trade, understand the value of what your trade will be based on a particular move of the market, and that's really great when you're targeting levels. Okay, whatever, it doesn't matter whether you're a deviation level trader or fib level, support and resistance, and you're expecting the market to, stall out at that support or resistance level. Okay, what kind of move in the market is that? What kind of value move could I get in a binary? How do I know that? And then how do I choose the best one? Okay, and the strike ladder right in front of you tells you all of that. Okay. All right, guys, hope that was helpful. Hope it's something you can, take with you now, today. Like, not just, oh, hey, that was a great, little webinar there. But like, I want you to be able to take this stuff, and as soon as we're off the webinar, go and pull up the Nadex platform and start using what you just learned. You know what I mean? Like, it's something that you can use right away, practically day to day. Okay? All right, guys. Thank you so much. I appreciate your time here. Make sure to hop on to nadex.com, check out any of the upcoming webinars, get signed up for those. That way you can get some email reminders as well, and we will see you on the next webinar. All right. Thank you so much for your time, guys.